Tonight's message isn't comfortable, it's not cute, and it's definitely not the kind of thing that gets repeated on the nightly everything is fine circuit. Because while people fight over headlines and hashtags, something quieter is happening in the background, and it's draining your money in real time. I'm talking about the slow-motion destruction of purchasing power, the kind you don't feel all at once until you wake up one day and realize the same paycheck buys you half the life it used to. Here, S, what should make you sit up? Gold and silver aren't. T rising because they re-magical. They're reacting because paper currencies are being diluted. And the longer that keeps happening, the more brutal the math gets. Quick note before we go further, my YouTube stats still show a lot of you watch every video, but you haven't subscribed. If you value this kind of straight talk, hit subscribe and drop a quick comment. Even OG John AG works, so the algorithm knows you're really here. All right, let's get into it. For years, people treated gold and silver like a weird hobby, something your uncle brings up at family dinners, something old school, something smart money supposedly grew out of. And yet prices have moved so far, so fast, that even the skeptics are looking up like, wait, what just happened? Here's what changed. Back when gold was much lower and silver was sitting in the low double digits, most people weren't worried. Governments were already borrowing hard, but it felt abstract. It didn't feel personal. Now it feels personal. Because when governments spend more than they collect, they close the gap two ways: more debt and more currency creation. And that second part, creating new currency units, doesn't stay trapped on a spreadsheet. It shows up in your grocery cart, your rent, your car payment, your plane ticket, your small breakfast that somehow costs like a luxury purchase. And the most dangerous part is this: it trains you to blame yourself. You start thinking you're failing, that you're bad with money, that you need a new hustle, a new app, a new side income. But sometimes the system is the problem. So let's simplify the insanity. Imagine your household spends more than it earns month after month, year after year. You can stretch it for a while with credit cards, you can refinance, you can juggle, you can pretend. But eventually, the interest becomes the cage. That's basically what's happening at a national level. Massive debts, massive interest costs. Inside a political culture where numbers get so big they stop sounding real. Like pocket change. When you hear, it's only another few $100 billion, translate that into, we are normalizing chaos. Does that mean the world ends tomorrow? No. It means the slow leak continues. And slow leaks are dangerous because people adapt. They get used to them. They stop noticing until the room is flooded. That's why metals matter. Not because they're trendy, because they don't get printed. Gold has no print button. Silver doesn't get an emergency policy meeting that triples supply overnight. Yes, they can be mined, but not on command, and not at the speed currency units can be created. So when you see gold and silver climbing, it's a signal, a loud one, a warning light on the dashboard. And here it's the cliffhanger you need to hold on to. When the crowd finally understands the signal, the move is usually already underway. Now, I know the question in your head. Okay, John, but am I late? That is what everyone asks after a big move, and it's exactly why most people never position early. They wait for proof. They wait for comfort. They wait for permission. And by the time the story feels safe, the price is no longer forgiving. But here's the better question. Late compared to what? Late compared to yesterday's price? Maybe. Late compared to the multi-year process of currency dilution and the debt trajectory? Not even close. Because the real driver isn't a chart. The real driver is behavior. Government behavior, central bank behavior, and social behavior. When a society decides borrowing is normal, deficits are permanent, and currency creation is a solution instead of a last resort. You don't get a quick fix. You get a long runway of consequences. And metals tend to price those consequences in advance. Now, let me be crystal clear. This is not a get-rich speech. If you're drowning in credit card debt and thinking, I'll buy silver and save myself, that's backwards. First, stabilize your foundation. Emergency savings. No toxic debt. Spend less than you earn. Because if you don't fix the leak in your own budget, you'll keep bleeding no matter what gold does. But if you've done that, and you're just sitting on cash, wondering why it feels like it is shrinking, you are not crazy. Cash loses value in an inflationary world. That's not an opinion. That's arithmetic. Now let me put the big numbers into a format you can actually feel. When you hear tens of trillions, it sounds like monopoly money. So do this. Take the debt number people throw around and mentally divide it by the population. That's your share. Because debt isn't a ghost. Debt becomes future taxation, future austerity, or future money printing. And when rates rise, the interest bill explodes. Not just the principal, the interest. The system starts borrowing to pay interest on the borrowing. That's when you know you're not in a normal cycle anymore. So if you are wondering why life feels harder, even when the news says we're recovering, that asks why. And here's the next cliffhanger. The public always gets the message late, because the message shows up as higher prices first. not as a press conference. You don't get an announcement that says, "Congratulations, your currency now buys less." You just get smaller portions, more fees, lower quality, and that constant feeling you're running faster to stay in the same place. Now, in the middle of all this, there's another trap: narrative addiction. Every cycle has a story that hijacks attention. Right now, it's AI, so loud it drowns out everything else. And listen, I'm not saying technology isn't real. I'm saying price matters. A revolutionary technology can still be a terrible investment if you pay a ridiculous valuation. Even the biggest winners can get cut in half, or worse, if the crowd gets euphoric at the wrong time. So here's a practical exercise. Decide what kind of investor you are before you ever place a trade. Are you value? Margin of safety? Patience? Hates overpaying? Are you reasonable growth? Quality, but not at any price? Or are you momentum? Speed? Volatility? And you understand the downside can be violent? None of those is morally superior, but pretending you're one when you're actually another is how people blow themselves up, and it ties back to the bigger message. If you can't handle your emotions, you can't handle your money, because the market will test you. It always does. If you're raising kids, or plan to, this matters even more. Financial chaos doesn't just steal money, it steals time. So teach basics early. Save something, give something, spend something. Delay gratification, understand opportunity cost. A cheap purchase today can become a decades-long expensive decision if it stops you from building a base. And if you feel behind, don't spiral. Start small. Discipline matters more than size in the beginning. Yes, the numbers are ugly. Yes, policy is reckless. But that's exactly why you build skills, build discipline, and position yourself with intention. Because the goal isn't to beat the market. The goal is to protect your family, protect your future, and keep your freedom in a world where the rules can change overnight. And here's the social side people ignore. Who you spend your time with is a financial decision. If everyone around you treats debt like oxygen and impulsive spending, like a personality trait, you'll absorb it without noticing. If everyone around you is learning, planning, investing, and staying calm under pressure, you'll absorb that too. So decide where you're going, then curate your inputs, podcasts, friends, timelines, and the constant doom scroll. You don't need perfection. You need direction. And that brings me back to gold and silver. Metals are not a religion. They're not a team sport. They're a response to a set of incentives that keep repeating. When incentives change, you adjust. When they don't change, and the printing continues, you prepare. That's why I keep saying, don't wait for permission. Build your plan while the room is still quiet. Because once the crowd finally agrees with you, the window for easy decisions is already closed. History rhymes. Every bubble wears different costumes, but the emotions underneath are the same. Greed dresses up as innovation. Fear dresses up as prudence. The crowd always believes this time is different. It almost never is. That's why studying past cycles isn't nostalgia, it's armor. If you've lived through one mania, you recognize the next one faster. And speaking of staying plugged in, if you want daily updates, posts, and my personal analysis that doesn't always make it onto YouTube, I created a WhatsApp channel. The link is in the description. It includes premium posts, instant voice notes, and quick updates I don't upload here. Join it so you're not reacting late. If you're still unsure where to start, watch this twice. First for the message, second for the details. Then take one action today. Small, measurable, real. And repeat it tomorrow. Now let's talk psychology, because this is where people get destroyed. Markets aren't just numbers. They're mood. They swing on fear, greed, and narrative. One year the crowd worships tech. Another year they worship something else. While everyone chases what's popular, the quiet opportunities sit ignored until the stampede begins. That's why I keep saying, don't outsource your brain. Don't watch 2 clips and throw your life savings into the first smart-sounding idea. Learn. Understand yourself. Know your risk tolerance. Because the biggest advantage isn't a secret indicator, it's emotional control. Some people panic at 4%. Others can sit through 40% and still sleep. Those are not the same investors, and they shouldn't run the same strategy. So ask yourself, who are you when the screen turns red? You'll also hear people say, just hold cash. That advice is usually misunderstood. Institutions sometimes hold massive cash piles because they need rare, huge opportunities to deploy at scale. That is not the same as an everyday person holding 30% cash for years while inflation erodes it. For most people, sitting in cash long-term is a silent tax. You don't feel it day to day, but it compounds against you. So the real question isn't cash or metals. The real question is, what's your plan? Your time horizon? Your goal? What do you want your money to do for you? Money is a tool, not the scoreboard of your self-worth. And if you are doing well, whatever well means in your life, do something for the community. Share one thing that worked for you in the comments. Even a small win helps someone else realize progress is possible. Now here's where it gets even more intense. As people wake up, they fall into two traps. Trap 1, freeze, overwhelmed. Trap 2, sprint, chase what already ran. Both are emotional, both are expensive. The better move is structured action, calm action, intentional action. Learn basics, build discipline, then allocate step by step. And while we're here, something creative. If you're into silver-related success stories, real people, real journeys, real outcomes, there's a separate channel linked in the description. Subscribe over there too and see how others turn smart decisions into momentum. Now, let's say the part nobody wants to admit. We're living above our skis as a society. That sounds dramatic until you look around. 2 incomes just to keep the lights on. Parents exhausted, not because they're lazy, but because the cost of survival is climbing faster than the ability to breathe. And the tragedy is it doesn't just hit wallets. It hits relationships, families, mental health, time. So when I talk about gold and silver, I'm not just talking about investments. I'm talking about how people protect themselves from policy decisions they didn't vote for, didn't understand, and can't control. Because when the bill comes due, it doesn't hit decision makers first. It hits the working and middle class. Now you might be thinking, so what happens next? Here's the uncomfortable answer. The system can keep going longer than you think, and it can also change faster than you expect. Both can be true. That's why you don't want to wait until panic is everywhere. By then, your options shrink. Think of positioning like buying a fire extinguisher. You don't buy it while the kitchen is already burning. You buy it when it feels unnecessary. Now I've got 2 questions, and I want real answers in the comments. 1, what has gotten more expensive for you in the last 2 years that shocked you the most? 2, do you think most people understand inflation is a pay cut, or do you think they've been trained to accept it as normal? Drop your thoughts below. I actually read them, and I use your questions to shape what we cover next. Before we close, quick note for the people who want tighter updates. By the time you're watching this, a members-only video is already live that pulls the latest updates into one clean picture. If you want the full view without the noise, join membership and watch it. Premium members get more in-depth analysis. And honestly, it shows me who's really following the work. So here's what I want you to do. Subscribe if you haven't. Join the WhatsApp channel in the description if you want daily updates and voice notes. And if you want the most complete breakdown, check the members-only video already live. Because what's coming next won't be announced politely. It won't come with a warning siren. It'll show up in prices, shortages, policy shifts, and that quiet realization that the old assumptions don't work anymore. And the people who win in that environment aren't the loudest. They're the most prepared. One last thing. If you're doing well, financially, mentally, spiritually, don't keep it to yourself. Share one lesson in the comments. Your story might be the thing that pulls someone else out of fear and into action.